All right, y'all, and good morning, good morning, good morning. Welcome to another episode of Money Matters, and happy Thursday to you. My name is Nev, and today we're going to be talking about real estate. So, as you know, I am very big on real estate and really enjoying what the real estate offers us. And I am over here looking at the stuff, and it looks kind of funny on my end. So I don't know what's going on. Hold on just a second. Let me see. I don't know what's going on. So it looks funny when I look at the screen, but anyways, I'm just gonna continue talking about the stuff, and hopefully the video actually comes out pretty darn well. So my apologies for the slight change in plans of conversation, but I do want to welcome everybody who is watching this live or watching the replay. And in today's episode, we haven't done the review of real estate for a few weeks because, well, I've been gone for a few weeks. But today we have actually a lot of stuff to cover. Of course, we're going to be taking a look at what's going on when it comes to the mortgage rates, and of course where we are with the sort of what we can expect for 2021. We didn't cover that as much. I did talk about a few different components, but I want to make sure that I spend time today to discuss of what we can actually expect to see when it comes to the real estate market. And of course, we're also going to talk about different segments of what we could see potentially when it comes to multifamily versus single family. I think it's very important to talk about the distinctions of the two things, because while it is all real estate, let's be realistic, it is also a bit different market and different sort of impact that it has. So we're going to be taking a look at that stuff. When I talk about the commercial today, we're really going to be talking about multifamily. So apartments, mostly rentals. I know around the world, apartment is something you own. Here in the United States, we call that condo. Okay. An apartment is something you rent. So just for you, if you're coming from another country, you're like, I don't know what you're talking about, Nev. Well, now you know. So we're going to be taking a look into that stuff. We're also going to be taking a look at something that I have been actually talking about a few months back that has to do with this sort of remote work, and what does that have, what impact does that have on real estate. And I've actually done a video, I want to say like fall, maybe summer, I can't remember, but it was one of those walk and talk sessions that I do every so often. And we talked about sort of what the impact that could have on the real estate and how to you value it as a real estate investor potentially. So we're going to be taking a look at some of the articles that I have found. Actually, one article, let's be honest, one article that I have found that talks about that experience and sort of where things are going and how things are developing, because I think it's really important for you, if you're looking to invest in an area maybe where you don't live or area that you do live in, what you should be thinking about and how you should be positioning this property in order to get your tenants, and kind of what you can expect, what people are looking for. We're also going to be taking a look at something that I am incredibly passionate about, and that is this huge, I call it sort of like a secret society of real estate that is really governed by the National Association of Realtors, and is also governed by all of these sort of gates that are provided and put in on all of us when it comes to real estate, that if you want some of the stuff, you actually have to be part of it. To be part of it, you have to be registered. To be registered, you have to belong to a broker. To be a broker, you have to, right? So it's really one of those things that they're making it impossible for everything else. And the cool piece is that there are some antitrust lawsuits happening in the industry, in the real estate industry sector, that I'm going to be talking about, and we're going to be discussing exactly how what is happening right now impacts you as a homeowner, as an investor, as a potential buyer, as a renter, and what are the things that they're fighting for, and what are the things that I am personally working on to try to rectify that stuff. So it does feel like David versus Goliath. So here you go. Meet David, aka Nev. Anyways, that's all we're going to be discussing and talking about here. So we're going to be taking a deep look into the real estate stuff of what's going on, and let's do this. All right, y'all. And good morning, good morning, good morning. Welcome, welcome, welcome. If you're brand new to the whole thing, hey, do me a huge favor. Do subscribe, do like the video, forward it to others. Feel free to put in the live chat if you're watching this live, or put in the comments. I do actually read that and do respond. All right, let's get started. Let's not wait any longer. Let's take a look at what in the world is going on in the world of real estate. And of course, we're going to start with what's happening with with the mortgage rates. So the average rate on the 30-year fixed is now about 2.73%, and it's actually slightly down from 2.77% a week ago. And the average 15-year fixed rate loan is 2.2, down slightly from 2.21 a week ago. So not a big change, but a change nonetheless. And we do expect to see that the rates are going to be in this mid to high 2% for 2021. And potentially we could see it actually start to take on slightly higher in 2022. But for 2021, we do expect to flirt between 2.5 and 3%. Again, a lot of it depends on the 10-year treasury, so you do pay attention to that stuff. That will give you a clear indication of what you could potentially expect to see. It also affects on the market, the type of property, your credit score. So all of those different components will guide and drive what you will or will not see on your end when you go and try to get a mortgage. So one of the things that I wanted to go over is what can we expect to see in 2021. So here we go. Let's really have a discussion about what we can actually expect to see in 2021 when it comes to the real estate sector, which is one of the most important economic thermometers of what's going on. We do have some of the other stuff, but I think when it comes to the consumers, of course, everybody talks about the shopping and stuff, which I understand that is important. But knowing that vast majority of individuals hold their wealth to a big degree in their homes, I think it's very important for us to also acknowledge that this is a very, very important sector. So this particular article is coming from MSN Money, and it's actually a monthly Fool article. And so some of the trends that we could see in the mortgage industry in 2021, I think this is really important because it affects all of the homeowners as well as investors. So you can expect to hover around 2.9% in 2021. We already discussed that, about 3.2 in 2022. And a steady rise of mortgage rates could ultimately have the effect of slowing down on mortgage origination. And of course, we could see a bit of a slowdown potentially on the purchase and the rise of the prices, which I actually think that this is really, really good. Single family housing will will increase 12.5% compared to that of what happened in 2020. That means that we could expect to see much higher number of homes that are going to start hitting the markets, which as at this particular case instance is very, very important, because what has been driving the prices really high is that the demand jumped up, the supply actually, didn't. And so we saw these insane prices in 2020. We are seeing that the home builders are really going out there and trying to build as fast as they humanly can to try to hopefully meet the demand. The very unfortunate piece, and something to watch out for sure, is that typically when home builders kind of go in and they see that money is to be made over there, they often end up jumping in and overbuilding. So they put extra supply, and if we see that happening, we could actually see that the prices could start actually coming back down. Will it crash completely? That is the sort of the narrative that is being shared on the YouTube channels and social media. I personally don't think that is going to be a case, but it's also going to depend from locality to locality. So it's going to be very localized piece that you need to pay attention to. When we're talking about a lot of these things within the real estate industry, especially in this channel, please keep in mind that we're talking about national stuff unless I specifically talk about this particular town or this particular area of the town. Because if you know anything about real estate, right, we know that there's 3 rules about it: location, 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 right? You already know that. So pay attention to that when you hear some of these things. We're talking on the global spectrum, but locally things are very different. Let's go back to sort of 2008 for a moment, if you will humor me, please. And I remember in 2008, I lived in, right before 2008, I actually lived in Southern California. Then I lived in Arizona. So during that whole time, I was actually in the area that was largest impact on the home prices and the crashes. Then coming to New England, for example, I would go to places like Vermont and Massachusetts and Rhode Island, and they didn't really feel it all that much. I mean, yes, there was some, but it wasn't as big as we've seen in places like California, Arizona. I want to say Florida saw it big time. Detroit got destroyed. Chicago, certain areas saw it, certain didn't. So those are some of the pieces to kind of pay attention to. And speaking of Detroit, when we're talking about sort of super localized, if you know anything about Detroit, is you can't even take Detroit as a whole, because there are pockets of Detroit that are still suffering and struggling when it comes to the real estate stuff, and their prices still haven't recovered. You can still find homes for a few $100. I mean, you're going to have to rebuild the whole darn thing, and typically, you're going to need to have quite a bit of money to actually rebuild the entire community, because the entire community, entire neighborhood has been taken down. And then you can actually go a mile south, for example, or southeast, maybe it is. Pardon me for not remembering exactly. And the area is booming. It's beautiful. It's fully developed. The prices are on par with what we're seeing nationally. And so this kind of gives you that idea of, you can't just take it, when we talk about some of these things, you can't just take it at a global spectrum. You really have to make sure you understand the market that you're in when you're making your decisions. All right. So I wanted to make sure that I mentioned that stuff, because oftentimes when we hear these big news, we tend to react thinking that that's kind of how it is. It's not like a stock, right? Tesla stock goes up. It goes up for everybody, regardless whether you are in California, New York, Florida, Texas, or somewhere in Spain, right? It goes up for everybody. Housing, not so much, right? So depending on where your house is located and what's happening in that localized market depends on what your experience is with it. And that goes with the prices, with appreciation, with the rental, whether you're actually full or you're hard to rent, whether you need to evict or don't need to evict, whether it's easy to evict or really hard to evict. So all of those components make perfect sense. And that's something that as a real estate investor, you have to understand in a very different light than perhaps somebody who is just in stocks or ETFs or something like that. The third piece that they're talking about, home sales and home prices expected to move higher, but not nearly at the same rate as 2020. 2020 was insane. Can we all agree to that? On so many different levels, it was like completely nuts year. And if you think about it, folks, we're only a few weeks away from calling it a full year, full 12 months that the insanity begun. On some levels, it feels like it started, I don't know, days ago. And on some levels, it feels like we've been at it for like a decade. Home sales are projected to come in at 3.8% higher this year than in 2020. Expect housing activity to remain strong in the coming year, but nowhere near the rapid pace observed in the second half of 2020. So what they're saying is, of course, you can expect that your home price, home value, is going to go up. Last year, I want to say on average nationwide, right? Keep that in mind. I want to say we were somewhere around 13%. They're saying, well, you could actually expect about 15 to maybe even 20%. And it kind of makes sense if you think about it. When all of this money, all of this stimulus has been created, that money, that slush fund has to go somewhere. So where does it go? It goes into assets. This is why for years I have been saying, maybe not on this channel live, all right, I'll be honest, I won't lie, but I have been saying for years, you got to get into the assets, you got to own the assets, you got to hold on to those puppies. I know trading sometimes can be fun, super fun, especially if we're talking about stocks and crypto. But trading does have a lot of risks, and you're paying a lot on the taxation because of those gains are short term. So that means you're paying ordinary tax. And if your ordinary tax is 40%, then I hope you made way more than 40% in order for you to actually make money, and make sure you also account for the commissions that you're having to pay, unless you're using Robinhood, which is Robin the Hood. You know how I feel about that place. Anyways, home values are expected to continue to climb even higher. And according to Logic Case-Shiller Home Price Index, home price rose by 9.5% in the month of November compared to that of 2019. So they're expecting that this is going to continue to climb, and we're going to continue to see this sort of increase in people wanting to get into homes. Zillow is saying that it expects home values to increase 10.3% through November. So between now, so over the next 10 months, about 1% roughly per month, which is not a bad deal, especially when we're talking about something like real estate that typically has an average price of what, 330, 350,000. So that's a nice little gain, 10%. That basically is somebody's salary for the year that you could see growth and appreciation in your value of your ownership. Chief economist at Realtor.com said that their outlook of 2021 expects an eventual moderation to price gains as home construction wraps up and widespread availability of COVID vaccines bring more flexible sellers back to the housing market, but it will be some time before these changes bring relief. Now, I do want to pause over here and talk about the COVID vaccines just a bit. I don't have an insider information. I'm not a medical professional. I can't tell you whether it's a good thing, bad thing. You got to form your own decision. One thing that just looking at the supply, looking at the demand, the number of people, the number of rounds, and what we've seen with some of the slowdowns, I don't expect that this vaccine thing is going to be widely available for everybody sooner than this summer, maybe this fall, maybe even later in the year. And of course, with this virus constantly migrating and developing, creating new strains, and viruses are very smart creatures. They want to live. They want to live, and life finds a way, I will tell you. And so virus is mutating like crazy. And so the question remains, as it mutates, will these drugs, will these vaccines actually keep the pace? Thus far, they're reporting yes, but again, we don't know what the future will bring. So just something for you to keep in mind. Put it in your back pocket. Don't hang your hat on the whole thing of like, yeah, they found it solved, because other things that are also viruses are things like flu and common cold, and we don't have a solution for those puppies either. Now, I understand they might not be as severe as COVID potentially to some of the folks. I get it. But what I'm saying is, if we couldn't figure out the common cold and the flu vaccine for all these decades, what makes us believe that 6 months in lab is going to create a panacea for something that is allegedly, potentially, reportedly much more violent kind of virus? So just something to note. That's just my personal thinking. Again, not a medical provider, not a medical advice, not a financial advice either. All right, so just the way I think. While home sales are expected to be higher than in 2020, total origination of loans are expected to decline. Fannie Mae expects that the purchase mortgage originations to be around $1.8 trillion, up from approximately 1.6 for 2020. And refinance is the one that is actually going to go down, and they're expecting it to be around 2.2 trillion as opposed to 2020 that it was around 2.8 trillion dollars. So we could see some of that stuff, and it kind of makes sense, right? But I think that that is also going to depend largely on this sort of value increase, right? If we're seeing these ginormous increases and the rates stay at 2.5 or maybe even drop down to below 2, which is a possibility, I don't want to discount that, and I don't think we should discount that. So if we see a combination of the prices continue to go up, appraisals continue to go up, rates continue to go down, it would not surprise me that we see a rise of individuals saying, saying, heck, I might refinance yet again, especially if some of the fees end up being really low and you actually end up lowering your monthly payments even further. Some people might do a cash refi, which we haven't seen as much this round, but people have been refinancing and taking advantage of the lower rates. So that's something that we could definitely see. And one of the pieces that they're also talking about in this article is a drop in commission revenue for those in the industry. And I will actually explain more as the show continues. And it has to do with my big sort of bone to pick with the industry as a whole. I love it. And I don't love everything about it. Have you ever experienced that? Because I know I have. All right. So now we're going to take a look into sort of where things are developing, where are people going, what is going on, where are the markets that are sort of seeing things moving and shaking and kind of what's going on. As you know, millennials is the largest population after the baby boomers. And of course, the Gen Z is also coming right behind them pretty strong. But Gen Z is still on the younger end of spectrum, so they're not quite in the buying of the home area. Now, that doesn't mean that they're not going to get there in a few years, because some of them have already entered the renting stage of their life, some of the older generation. Millennial is this new generation that is coming in. The oldest of the millennials are actually in their mid to late 30s, if you can believe it. And the younger ones are right there in their mid 20s. So you kind of have this nice little range. And then, of course, you have the Gen Z, which is basically some of them are still in high school and some of them are actually starting to kind of graduate college and start entering first jobs. Crazy, I know. Don't you feel old? Because I definitely do. So let's take a look at where the millennials going, because I think it's important to understand where is this new money going. What is the future? I think it's important to understand what the boomers are doing, because that drives a lot of things, and it's going to drive a lot of sales in some of the areas and markets, and potentially purchases on the relatively short term, because some of them are still kind of on the tail end of right about to retire. So we could see some retirement communities still kind of get a little bit of that boost. But I believe that that is going to actually start coming back down, because, not everybody, as the generations change, the needs and desires change. And here to help us, we actually have this beautiful map of US of A that is going to share with us of where are they going. So we do have a few top markets that the millennials are going, and number one is San Jose, California. Number two is Boston, Massachusetts. Now, one of the things that we have learned in taking a look at this stuff, and this report is actually coming from LendingTree, they basically have taken a look at their lending, where people borrowing money to purchase homes, right? So it kind of makes sense for them to know that. They also have sort of the age of the population, so they're able to triangulate the data, and they gave it to us. So thank you, LendingTree. We appreciate it. So where are they going? Well, the top two are San Jose and Boston in the East Coast, West Coast. I like it. But one of the interesting pieces is that they're also noting that while these markets are pretty pricey, what we're seeing is that the older millennials and millennials that have higher end jobs, typically tech jobs as well, are the ones that are getting into these hubs. Some of the other areas are people that might not necessarily make the top dollars. And we're also going to be talking about where some of the tech people are going because of the remote work, and not just tech, but tech is part of it, right? Because it's one of the easiest jobs to have remote. So where are they going? Well, San Jose, California, number one. Boston, Massachusetts, number two. Denver, Colorado. Colorado has been popular with millennials for a while now, so it's not a shocking piece. Minneapolis, Minnesota. Minneapolis is beautiful. A little bit too cold for me personally, come certain times of the year, like right now. It's really, really cold for me, but it is a really cool place, really cool city, very young, very funky, very awesome. Another place that is very similar in my eyes to the Twin Cities is going to be Portland, Oregon, and Seattle, Washington. Now, interestingly enough, Portland or Seattle did not land on this list. The fifth spot is Buffalo, New York, of all places. Very snowy place of all, but people are going there. Then we have San Francisco, California. I don't think that that's a shocker for anybody. And now that we're seeing some of these
rental prices and stuff dropping in San Francisco, I could see actually San Francisco starting to pick up a little bit of a steam potentially, but there's some problems over there, so we'll see how that is all going to play out. In the seventh spot is Salt Lake City, Utah, another beautiful place close to the amazing skiing. Same thing with Colorado. Hey, if you are big on winter sports, Utah and Colorado are awesome. All right. Can I just say that? I live in New England now. Yes, we have ski resorts, but you are mostly sledding down the ice. There's no that powder, I will tell you that. So it's a very different skiing experience. So my preference is West Coast for skiing. I won't lie. Eighth position is Austin, Texas. Austin, Texas has been a really big hub that has been developing over years. We've seen many individuals that are within the tech space, with money space, VCs, and so on, move into Austin, Texas. And Austin, Texas used to be this small neighborhood town, and I don't think we can qualify it as that any longer. That puppy is definitely growing and developing, and the prices of homes are going on up, and I believe that they will continue, especially now knowing that Amazon is also moving their hub over there. Another place that is not actually listed here that also has ridiculously high prices is Jackson Hole, Wyoming. I know, because I looked about moving there. I'm like, woo, holy mackerel, look at the prices over there. But part of that is because A, it's a cool place. B, it's a cool place. C, there's not a whole lot of land over there. All right. Ninth spot is Pittsburgh, Pennsylvania. Interestingly enough, there's many people going back to Pittsburgh. Pittsburgh used to be this huge like manufacturing and factories and that kind of stuff, and they are actually reworking themselves and wanting to attract younger population. And hey, younger population is responding and going there. And in the 10th spot, no surprise, New York, New York. So New York City is in the 10th spot, which it's not a surprise that it's in the top 10, but it is kind of surprising that it is in the bottom of the top 10 personally for me. But again, I do also understand that New York does have a lot of challenges on its own, and it has a lot of problems, and we've seen a lot of the prices kind of come down, similar to sort of San Francisco. Not exactly the same of what's happening in San Francisco and California, but a lot of similar components. And the biggest sort of downfall for New York, in my humble opinion, had to do with the lockdowns and the COVID and kind of what happened there. So I think that these cities that, as we're seeing, kind of come back down, we'll see a rebound. What is exactly going to look like? It's anybody's guess. But I don't really see New York City disappearing. But then again, I could be wrong. I don't have this sort of like woo woo, seeing the future stuff, right? So I don't have that stuff. I can't tell you for sure. But one thing I can tell you is one of the things that we talked about is with the rise of remote working. And hey, you might be one of those people as well that is remote working. That opens up an ability to work from anywhere in the world. And guess what? We have now the rise of digital nomads. That's right. We are seeing more and more people reporting like, I'm leaving California. And then they do the whole video about it and where they're going. And some people are going to Vegas, some people are going to Texas. But we also have people that are bye-bye to the US of A and going elsewhere to live around the world, finding all kinds of cool places, anywhere from Latin America to Europe, Africa, Asia. So it's opening up the doors. And basically, as long as you have a computer, as long as you have internet access, as long as your work allows you to work remotely and kind of log in through the remote portal, hey, you can work from anywhere, and people are starting to do that exactly as I had predicted. And if you don't believe it, just go into the YouTube channel and look. I like I said, I want to say it was sometimes in the summer that I talked about it. I can't remember, but you'll definitely find it on the real estate channel version of the Money Matters. So what's going on and what's happening? Well, a digital nomad, let's first just define it, right? A digital nomad is an individual who actually uses telecommunication technologies to earn a living performing their work remotely. A digital nomad works in location independent, meaning they can go anywhere they want to do, in general, conduct their business in co-working spaces, coffee shops, libraries, and sometimes in the place that they are renting or leasing or owning. And sometimes, hey, they work even on a beach. Wouldn't it be nice sit somewhere on the beach with the little umbrella, sit over there, do the little thing, check the little email, sip on Mai Tai, go jump in for a little bit of a swim, come back, continue working. Make sure you dry your fingers off before you touch that computer, all right? You don't want the water and the salt to get into it. So you definitely want to be careful with that. But almost 11 million American digital nomads are there as of 2020. And I truly believe that that number is going to continue to rise, and it's going to be a growing the demographic. And of course, they're saying, hey, we agree with you, Nev. The quick adoption of technology, coupled with current global circumstance, has facilitated digital nomads' rapid growth. A 49% increase in American digital nomads from 2019 to 2020. That's a huge gain, y'all. That's a huge gain. And I don't think it's going to stop or go away anytime soon. So I think that's an important aspect for us to acknowledge. But what are they doing? Well, they got to go somewhere. Where are they going? Well, a lot of them are finding places where they always wanted to travel, always wanted to be places. So they are moving to places that fit their lifestyle. Some of them enjoy winter sports and skiing. So, hey, they will move closer to those winter ski reports and enjoy the winter weather. You go in, you work for a few hours, you go do the skiing. Some of them are moving to lower cost economies like certain parts of Europe, certain parts of Latin America that they're moving into, getting much more affordable housing. And so their money goes much, much further, even if they're not earning a ton of money. So, of course, there's one of the, in Europe, they actually developed a first digital nomad village, which was actually in Portugal. So if you're interested in that, it's going to be located in Portugal, but I don't believe it's the only space. It's just the first one that actually developed. But what's happening? Well, availability to access services from any device with internet access allow digital nomads to travel with laptops, tablets, and mobile homes and phones, mobile homes. Well, that too, and work remotely. So, of course, a lot of it is seeing as a ride of SaaS, software as a service, which is offering digital nomads that have greatly benefited from having a job over there. And it's simple. You visit a website, you log in, like I said, and boom, you can actually just go and do what you need to do. Now, an interesting piece that you need to know about SaaS is it's a world market revenue past $214 billion in 2019, and it's growing by 30% per year. So every year that puppy grows 30%. Well, as they grow, the employment base grows, meaning more and more people will join SaaS, have a job over there, meaning they become more remote. Now, SaaS is not the only one. We're seeing remote work everywhere with everything, but the remote work is here to stay, and you can basically say goodbye to the manual updates, office dependency, and that kind of stuff. Some places still will have that, but I think we will see a much wider range of the whole thing, and people are going to be doing more of this telecommuting, telehealth, tele everything, right? Everything is going to go this way, and it's going to have a huge impact on the business, on how we work, and of course on real estate, right? We used to have to go to a particular town because if you get a job with the company that has offices in Denver, Colorado, well, guess what? You're moving to Denver, Colorado if you want to have that job. However, today what we're seeing is that that job, that company might be based in Denver, Colorado, but your work is remote. You can stay where you are. You can move to Denver, Colorado if you wanted to, or you can pick up your laptop and go anywhere in the world. And hey, if you're really adventurous, heck, you can even get yourself a boat, little satellite thing, and boom, baby, you can enjoy that puppy. Just make sure you can have a connection. Otherwise, they'll probably let you go if you're not doing your stuff and having too much fun. The future of real estate is also having a lot to do with this stuff because people are going in and looking for places, and they're looking remotely. And I remember, and I think I told you this time and time again, not that long ago, I went to go and basically purchase a home sight unseen. I've done it multiple times now, and sold it sight unseen, bought it sight unseen, rented, all this crazy stuff. And that was crazy at the time. Today, that's pretty normal, right? So what they're doing is they're looking for it remotely. That means that as a person that is maybe a broker or a realtor, or maybe you as an investor directly listing your properties, which you can, of course. And if you don't know how, hey, hit me up. Happy to help. Uh, But what they're looking for is how property is advertised and leased. Digital nomads are looking to move into a new city or country, tend to rent their next temporary home from abroad, sight unseen, which means that they want transparency in their leasing process. They want to know exactly what we're talking about. They don't want this, made up photos that look pretty. They want real. Show me what's in there, right? Let's go do the tour live. Let's do all this stuff. Help me understand what is the community, what is the neighborhood, how close are the shops, what's around it, what can I do, what is the price, what can I expect. Video tours is another huge thing that people want. Verify testimonials and ratings as well if you have them. So what does this mean for us now as investors, right? An interesting piece. I don't know if I shared this with you or not, but not that long ago, I want to say it was November, right around Thanksgiving or so. I had an opening. One of the people was leaving one of the units. One other person was coming in, and for the first time, I actually had a person that was coming in asking me for references, right? Which is pretty cool because typically we're used to like, well, I'm leasing. Of course, I'm going to check the reference of person coming in. Well, guess what? It's dual way. So they asked for references. Thankfully, I was collecting them and have been collecting them and have a nice sheet of references that I can provide, and people are happy to provide them. So treat your tenants nicely. Be good to them. Be good to them. Okay. So but that was an interesting piece that kind of happened, right? That they actually end up connecting with a couple of the tenants and stuff. They actually made friends, so they're not friends. Anyways, crazy story. But that was the piece that happened. So be ready for that stuff. Make sure you plan for that stuff that will start to happen. There's also a need for landlords and leasing agents to leverage technology to facilitate leasing process. So if you don't have this in place, start thinking about signing of the documents. Now, here they're mentioning DocuSign, Adobe Sign, HelloSign, and that kind of stuff. You can use it. You don't have to. There are multiple different ways that you can do it today, but you can definitely use these components to help your tenants, right? And help it with the seamless flow of you send the documentation electronically. If you don't have your application electronically, you definitely should have that. If you, I don't know how you're collecting your rent, but you should find an electronic means to do it. I also believe that in a very, very near future, not only is it going to be things like DocuSign and Venmo and that kind of stuff, but people are also going to want to depend on the cryptocurrencies and blockchain. So be prepared for that to also roll out. And fingers crossed, maybe I can help you in the upcoming next few months. So that remains to be seen. So we'll see. We're so close, so close. But be prepared for that to come in. They also want to be able to upload, download documentation, sign the lease, pay virtually, sometimes even with virtual currencies, and you don't have to accept everything, right? But be prepared for that to start coming in. Essentially, what you want to do is allow your customers, allow your incoming tenants to have their next home basically ready upon arrival. When they get there, they want everything done, ready to move in, so they don't have to do much of anything. The other piece is also the component that you need to be aware of. The rapid rate of adoption, new technologies, is propelled by pandemic, but it's opening new opportunities. And digital nomads' rise will grow the potential market for short-term rentals. So that's another piece to also pay attention to, that we might see some of that stuff happening. But of course, what are they looking for, y'all? Well, they are looking for work centric rentals. It's a sure appeal to them. So as you're thinking about your rental and what's in it and maybe a remodeling, make sure, and we've been talking about it here on this channel as well, that you definitely want to make sure and pay attention to what's happening within the whole, like, do you have an office space? So you want to create that stuff. You want to make sure you have good internet or good internet connectivity for your tenants to kind of come in. And so pay attention to those components. The more things that you can provide them, they can be successful working remotely, the better off you are. And of course, much easier is to lease your space. Now, you also know that I am very big about what the hey is going on with the real estate market. As somebody that has been trying to kind of bring this to the people and try to sort of empower the people in what we have, I have been fighting, and it often feels like a losing battle. And we've been developing technologies around the real estate to empower the end users, basically investors and homeowners, partially because I want to use the darn thing. Okay, I need help. I want technology to help me, but also to help some of my students and to help everybody else around the world who wishes and wants these things. It has been an uphill battle challenge to try to do this stuff because a lot of things that exist, like I said, it's almost like mafia. You have to pay these ridiculous fees to join or kind of have somebody or whatnot. Like, it's impossible to do this. And of course, now we're actually seeing some of the news developing that is creating a showdown over real estate fees and what could actually happen with the market. So let's talk about this stuff because I've been talking about it, but now maybe with an article that is going to help you to really start to understand of what's happening. The commission that U.S. home sellers typically pay to realtors is under fire, with real estate industry accused of antitrust violations and extracting exorbitant fees. I agree. Finally, thank you, Yahoo News. I appreciate y'all bringing this up. This is a fresh press. As you can see, today is February 4th, 2021. This was posted only a couple hours ago. And here we are covering, and I absolutely agree. This matters in such a big way because there's some legal experts that predict that antitrust lawsuits over brokers' fees will reach the Supreme Court, and we might see some of the breakup of this stuff. There's some short-term and long-term, and let's talk about all of those components. Now, what happens now? Here is kind of how it works, right? And I'm so glad that they have it here because when I talk about it, people are like, "You're full of it, Nev." I'm like, no, 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 no. Go and do it and take a look at what they give you. A lot of times when you go and you buy a home or you sell a home, you are not paying attention to what's on the darn thing. You're just paying attention to, all right, what is my monthly thing and can I afford it? And will they approve me for the house? Take a look at everything because I assure you that there's a good chance that your realtor might be lying to you. Those are heavy words. I understand. I'm not saying everybody is, but I will explain how and why. And if you find yourself going, yep, I've heard that, there's a high probability that you've been lied to because I can tell you for sure, when I went out for my first property buying, I was lied to. And here's how it happens. You are a buyer. You find yourself a buyer's agent, right? And what does the buyer's agent do? Well, hi, Nev. My name is Bob or Sam or Judy or whatever, right? I will show you all of the homes. I will help you out. And just so you know, you don't pay me. I work for free. No, 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 they don't. No, they don't. You might not pay that broker or that agent directly. You're paying at the higher price than then they end up sharing with the buyer side. Let's read the article so that you understand Nev is not BSing you here. The seller's real estate agent typically charges 5 to 6% commission, sometimes can be as high as 10%. So please understand that it could be higher, and shares it with the buyer's agent. So you list the home and you basically agree to pay, say, 6%. Then that seller agent actually pays the buyer agent, but who pays for that house? You, the buyer. So who is on the hook and loses? Well, the buyer and the seller, the people that actually own the assets that are trying to exchange them, are the ones that are paying dearly. And how much are you paying? Well, a lot. A Justice Department settlement with the National Association of Realtors, which will be finalized as early as mid-February, will make it illegal for buyer-side realtor to characterize their service as free, as it often happens. Right? So number one, they will no longer be able to tell you it's free. They will have to explain the process pretty much the way that I did. Real estate websites will have to disclose publicly what percentage of a sale the buyer's agent will reap. The settlement will discourage blatant discrimination against discount brokers and the steering of buyers to high commission properties. So here's kind of what happens. You're like, well, I know you said you're charging me 6 or 7%, but I actually found a different realtor that said that they will only charge me 3%. I don't know how I feel about that. And they were like, well, you get what you pay for. They were probably bad people and they're not going to, and you know what? They could be, but they could also be just as awesome. You don't know that, right? So that's the part that it's kind of hard. The second part is what they also do is they steer buyer to higher commission properties, meaning if you are, and you probably have experienced this as well. So, hey, if you are there, let me know. Hit me up in the comments. Raise your hand live. Let me know if this happened to you, because I can tell you it happened to me, and it happened to just about every student I have ever had or every person I have ever talked to about purchasing properties. And we're talking about tens of thousands of individuals, if not even more at this point in my life. So here's what happens, right? They go in and say, well, okay, did you get pre-qualified? And you're like, I don't know. And they will say, okay, go get pre-qualified. And there's, we could argue that there's a good pieces to it. But what they will find out is that you were like, well, my range is about, I don't know, I'm looking for something between $200,000 and $300,000, for example, right? What ends up happening more often than not is that they will take you and show you some of the properties in a very strategic manner that will basically fall, and they use this thing known as recency bias. You need to understand recency bias. Recency bias basically says that when you see something and you see something else very recently, we as humans tend to compare them very easily. So they will show you something that is pretty run down at about 250,000, something that is like equally as kind of baddish on the 275. Then they will show you something at about 310, 315. They will show you something 350, and of course 350 is going to be way nicer than 250. Now you're going over there and you're like, and then they'll break it down to you and be like, well, on monthly basis it's only this much of a difference. And you're like, well, you're right. Next thing you know, excuse me, is that they are starting to show you everything on the high end of the things. So in my coaching, what I have been telling people when they're going and buying, I said, lie. I mean, I know that sounds horrible, but lie. Don't tell them. If your maximum is 300, tell them that your maximum is 275, because I assure you, they will be showing you everything on a high end and above it. Or if you're going to say, no, this is my thing, and I refuse to see anything, above or below that kind of stuff, then, you kind of have to stick to it. But please understand, we're emotional beings, especially if you're buying your personal home. We tend to fall in love, and then we let our heart drive us to where we want to go. And then unfortunately, our pocket suffers. So make sure you get very smart. Do your own due diligence, do your own research. Don't let them drive you around. But they're basically saying that the settlement will discourage blatant discrimination, but it's not going to prohibit it, right? So just understand that. Only the uncoupling of commission, so that both buyers and sellers negotiate and pay their own broker compensation, can foster the price competition that exists in most other consumer markets. This doesn't exist over here. And they're basically saying that they're demanding changes to rules called anti-competitive, and I absolutely agree. So there's a different lawsuits that are being filed that are all kind of happening right about now. This is a great David versus Goliath story, both in terms of the odds, but also in terms of the moral implications. And that's something that I have found myself personally in. Now, there's Jack Ryan, he's a founder CEO of Rex, and that's one of the discounting brokerage houses, and they're saying that their company charges 2 to 2.5% to sell a home, similar to the prevailing rates in other developed countries. We are working right now to also empower you to be able to actually list your homes and stuff. One small fee, you pay super small transaction on the whole thing. If you decide to utilize the platform, and if you decide not to utilize it, then you pay us nothing else, but you pay a one small fee. And so it's just one of those things that just really trying to topple it down. Because if you think about it, here's kind of what happens. Realtor fees are $100 billion a year business, probably even more. But 100 billion, that's with a B, dollar business a year. These commissions usually range between 15 to 18,000 on the sales of a $300,000 home, and represent one of the most expensive products purchased by many consumers. This is incredibly important for you to note and understand, because on average we buy, even if you're not an investor, right? If you're an investor, you're getting killed, okay, financially speaking. If you are just a buyer, on average, an individual human buys 3 homes in their lifetime, on average, right? And if you take account that you pay 15 to 18,000 per $300,000 home, right? Assuming that you just bought your first home, starter home as they call it, right? At 300,000, right? And let's assume prices never change. They stay exactly the same. You basically pay 18,000 plus 18,000, that's 36,000 plus another 18,000, right? So you basically over the lifetime, assuming prices don't change, which they do, you lose about $60,000 per on all these different transactions. That doesn't include the appraising fee, that doesn't include the financial fee, that doesn't include mortgage origination fee, that doesn't include the inspection fee. That is just for realtors. This is the problem and the challenge that I have with the real estate industry, and the part of what I'm working super hard to develop to actually break down and bring to people something that is much more fair for everybody to engage in. Okay. So that's one of the pieces that is happening right now. So pay attention to this stuff. And again, if you're an agent and stuff, this impacts you because you could actually expect that your fees are going to be higher. Now, one of the things that I also want to point out before you get mad at your agent, please understand that your agent does not get all of that fee. They pay a giant chunk to the broker. So brokerage firms are the ones that are getting the giant chunk of that stuff. Your realtor is not, okay? So they get a small portion of it, but they don't get nearly as much as what the brokers get. So it's really with the brokers and the National Association of Realtors. National Association of Realtors has 1.4 million members, and they're saying that it's confident that it will prevail in the lawsuit, and the Department of Justice settlement largely just makes more transparent practices that were already in place. One change: when you see a listing online in the future, you will likely see the offer of compensation that brokers are offering to each other. So at least it's going to become a bit more transparent, but it's not going to be perfect. Now, one of the pieces that you also want to understand is that traditional realtors are saying that people use broker can get burned by low level service, blah, blah. Again, like I mentioned that before, you could or could not actually be experiencing this. One of the things to also note is that with the rise and the change of this stuff, we A, are going to hear way more about it, and B, you could expect that you're actually going to be able to preserve more of your wealth that is stored in your home than you had in the past, and have a greater mobility. And that is my goal, my hope, and my entire desire of everything that I'm doing, anywhere from this show that we're doing here, all the way to One Deal Away company that is focusing on education, all the way to what we're building now with our SaaS business that is leveraging modern technologies like machine learning and crypto. So there you go. That's it for today. I still have a ton of stuff, but we've gone for almost an hour. This is what happens, Nev, when you don't do this regularly. But I had to go away. My apologies. So we'll probably end up doing some additional stuff over the weekends that is going to be real estate related, because there's a lot of things that we got to catch up and talk about. I hope that you have learned a lot. I hope that you are enjoying the show. And if that is the case, please do me a huge favor. Subscribe to the channel, smash the like button, forward it on to the people. Let's let people know that, hey, there are developments that are good for the people, that are going to help them preserve their money and be able to learn how they can actually participate in this amazing asset increasing in price stuff that we're seeing. So thank you very much for watching. We'll be back on tomorrow at 7 a.m. Until then, stay forever money blessed, and do remember, you are only one deal away.